So let's talk a little bit about the election and investing. Certainly, if Trump holds the White House and the Republicans hold the Senate, you're probably going to see a status quo relative to economic policies trying to push the economy forward. Now, what happens though if there is a Biden win? Well, when you look at this chart shows the current polling data on the Senate race. Now, let me get my head out of the way there. What you have here are 7 key states out there, and currently the Republican Party holds the majority. However, the polling is showing that many of these could go to the Democrats. If that happens, then they certainly could take over the Senate at that point, which says that if the House, which everybody expects to say Democrat, and then the Senate goes over to the Democrats, and then the executive branch goes there, well, you got a sweep of the 3 branches. Now, let's move forward and take a look at how that could affect the economy. So again, we know what Trump's going to do. Let's talk about what the Biden's proposal is going to be. Well, we know there's going to be tax increases, and specifically on corporations, there is going to be a tax rate hike. So they're expecting that the rate hike will go up to around 28% rate. Now, that's a sizable increase, and that would actually reduce the earnings on the S&P 500 companies by between 8 and 11%. And you know that the better the earnings, the better the stock market goes. The less earnings, the lower the stock market goes. So it is an issue out there. So what we're looking at is, if Biden does get in, how's it going to affect different industries, and how do we need to invest relative to that? Well, the reality is it's going to hit a lot of the industries pretty equally. But the best is going to be the industrials. The worst hit is probably going to be the technology sector. And it's a profit issue. So keep this in mind, because this is a cascading effect. So if you have the profits go down in companies, they've got to find a way to boost it back up. They've either got to be very innovative to increase their productivity, or they've got to decrease their expenses. And often what will happen is it turns into a little bit of an unemployment issue, which ultimately doesn't bode well for the economy. But at the end of the day, this is what we're looking at through the research from a 28% tax rate for corporations. Now, look a little bit further. There's other policies. On the technology side, you've got antitrust laws that could come into play, and the probability of that is actually pretty high. CNR's viewpoint is it will probably take years before that actually plays out. But again, a tax hike plus the antitrust is going to be a little bit disruptive. From a healthcare standpoint, there probably will continue to be a public option. So the single payer is kind of unlikely. When you look at the consumer's discretionary, they are looking at a minimum wage hike. That is very high on the probability list, and that certainly could hurt profits. And again, we're going back to the stock market on this, because if you have a rate hike, less profits, technology and policies that are put in that cut profits, and then you have a minimum wage hike, which cuts profits, it's a trifecta, and it will hurt the economy as the companies adjust. And it does have an inflationary aspect to it as well. Financials, low issues there, not a problem. Industrials, that could have a high likelihood of having some kind of environmental impact to the companies. In other words, improving the environmental outlook of how they produce goods. That would be a good thing, but again, penalties to get it done hasn't worked very well in the past, but we'll see how that actually plays out. But again, that could hurt profits. How does that look relative to the market performance? Well, let's look at this really from an incumbent party winning or losing, and what if a Republican incumbent wins or loses? How does the market react historically? And this chart actually takes the information all the way back to 1900. So we've got a lot of data here. If the incumbent party wins, well, there's a good chance that the year that they win, there's going to be an average of a 15% increase. The following year, about 6%. So a mild following year. If the incumbent party loses, and this is both Democrats and Republicans together, this is a combination, the market goes down about 3%, and it goes up the following year about 8%. So an 8% gain is good, but the 3% loss takes away from that a little bit. If an incumbent Republican wins, there's usually an average of a 20% increase in the market, and that's followed by an 8% next year gain. Probably the best for the market. If the incumbent Republican loses, that year we tend to have about a 6% loss in the market. There's a lot of jockeying in the market to reallocate positions, and then the following year looks pretty good. But a 6% loss, again, kind of takes away from some of the gain the next year, but I'd take a 15% gain the following year, wouldn't you? So as you're looking at it, just from a statistics standpoint, looks like stock market would rather have a Republican, but who really knows? We'll see how this actually plays out. Now, let's say Biden wins and they sweep the three branches. What do you do if you're a high net worth and high income earner? Well, we've got to look at things that are going to be more tax free. And traditionally, most investors are going to be looking at muni bonds. But if you just look at the AAA munis or the 10-year AAAs, you're probably not going to be too excited about the rate of returns. On a 5-year, you're at 0.74% rate of return. And on a 10-year, you're at a 1.62. Well, that's not covering inflation at that point. So where do you go? We look at this point, high yield munis. Now, we're not talking about junk type stuff. We're talking about the best of the best on the high yield. In this scenario, the after-tax returns are looking at 7.5%. Well, most people would say that looks pretty good moving forward. And again, that shows you the tax-free equivalent. So if you're a high income, high net worth, have a lot of non-qualified money, the munis might very well be the place we're going to have to look should there be a sweep in the three branches of the government.